Here's a summary of Altria's MO 2025 Q2 earnings call, designed for clarity and readability. Good morning, everyone. Today, we're reviewing Altria's financial performance for the second quarter and first half of 2025. Key financial metrics and highlights. Revenue and profit. Altria demonstrated strong financial results despite a dynamic market. Adjusted diluted earnings per share, EPS, grew by 8.3% to $1.44 in Q2 and 7.2% for the first half, driven by robust adjusted operating companies income, OCI, growth and share repurchases. Gross margin. Adjusted OCI margins in the smokable products segment expanded to 64.5% for both Q2 and the first half. Strong performance drivers. On. Nicotine pouches. This segment was a substantial growth driver, with on. Nicotine pouches growing 10 share points year over year, now holding over half of the oral tobacco category. Shipment volume for on. Increased by 26.5% to 52.1 million cans. Marlboro. The flagship cigarette brand maintained its leadership in the premium segment, expanding its share by 0.2 to 59.5%. Basic cigarettes. PM USA successfully expanded the Basic brand into approximately 30,000 targeted stores, leading to a sequential retail share growth of 0.4%, with minimal impact on Marlboro's share. This strategic move helped total PM USA's cigarette retail share increase by 0.2 sequentially to 45.2%. Middleton cigars. Shipment volume for Middleton rose by 3.7%, driven by its strong performance in the large mass cigar market. Value to shareholders. Altria returned significant value, with approximately $3.5 billion paid in dividends and $600 million used to repurchase 10.4 million shares in the first half of the year. The company expects to complete its current share repurchase program by year-end. Financial stability. Altria maintains a strong balance sheet, with a total debt-to-EBITDA ratio of 2.0x as of June 30th. Management's forecasts and outlook. Raised guidance. Altria raised the lower end of its 2025 full-year adjusted diluted EPS guidance to a range of $5.35 to $5.45, reflecting 3% to 5% growth from the 2024 base. Future growth drivers. The company remains focused on its long-term goal of mid-single-digit compound annual growth rate, CAGR, through FY28, driven by its smoke-free portfolio and ongoing strategic initiatives. Significant risk factors and challenges. Regulatory environment. A key focus is the need for significant progress in the U.S. nicotine market, particularly with enforcement against illicit products and acceleration of FDA market authorizations. Illicit e-vapor market. The flavored disposable e-vapor market, largely believed to have evaded regulatory processes, continues to drive category growth. While enforcement actions are showing momentum, more consistent action is needed. Macroeconomic challenges. Inflation and its impact on consumer purchasing behavior, especially among lower-income consumers, remain a consideration. NJOY litigation. The company is exploring next steps after the patent trial. An appeal board did not agree with its argument to invalidate Juul's patent, impacting the NJOY e-vapor business. Tariffs. While tariffs have impacted costs, Altria states they are not significant to the overall business and have been contemplated in guidance, primarily affecting international supply chain components. Highlights and lowlights. Highlights. Strong performance of the on. Nicotine pouch brand as a leading growth driver. Marlboro's continued market share dominance in the premium cigarette segment. Successful targeted expansion of the Basic cigarette brand, enhancing competitiveness in the discount segment. Significant value returned to shareholders through dividends and share repurchases. Raised full-year EPS guidance. Lowlights. The Patent Trial and Appeal Board's decision regarding Juul's patent impacts the NJOY e-vapor business. The ongoing challenge of the illicit e-vapor market, despite some progress in enforcement. Declining volumes in moist smokeless tobacco, MST, brands, which were not fully offset by gains from on. Key statements from management. Billy Gifford, Altria's CEO. In the second quarter, we continue the pursuit of our vision while maintaining our strong and profitable core businesses. On! Delivered strong performance and was the substantial driver of the segment's growth in the quarter. We continue to press for actions that will shape a fully regulated industry and provide expanded product choices for adult nicotine consumers. Regarding regulation, we continue to believe significant progress needs to be made to fulfill the promise of tobacco harm reduction. Our highly cash-generative core businesses supported continued investments in our smoke-free products, and the increased focus by key stakeholders on cleaning up the illicit market reinforces our confidence in the long-term outlook for our smoke-free portfolio. On Basic, it's about keeping them in our portfolio of brands, being there for the consumer, and having an open conversation with them over time. Sal Mancuso, Altria's CFO. Altria had a strong financial performance in the second quarter and first half of the year. Adjusted diluted earnings per share rose by 8.3% to $1.44 in the second quarter and by 7.2% for the first half, driven by robust adjusted operating companies' income growth and share repurchases over the past year. Our smokable business focuses on Marlboro in the premium segment. Adult smokers are facing macroeconomic challenges. We now anticipate adjusted diluted EPS in a range of $5.35 to $5.45, reflecting a growth rate of 3% to 5% from a base of $5.19 in 2024. We're going to continue to monitor the state of the adult tobacco consumer and their purchasing behaviors. Inflation is still an unknown variable going forward. In summary, Altria delivered a solid quarter driven by the exceptional growth of its on! Nicotine pouches and the resilience of its core smokable products. The company has raised its full-year EPS guidance and remains committed to its long-term growth strategy, while navigating a complex regulatory landscape and dynamic consumer environment.